All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but we're going to do it a little different. I have 3 stocks to buy for Jackson Hole. Now, maybe you're not going to buy all of them, but I would definitely watch these names for tomorrow. And if you don't know, tomorrow is going to be Jackson Hole. And what that means is 30 minutes after the bell, we will be hearing from Jerome Powell. So he is going to say a lot of things, and there's a lot of expectations. I actually got some crazy stuff to show you, but I do have a list of possible scenarios. So we're going to go over the bullish outcome, the bearish outcome, the ultra or the ultimate bearish outcome, and then the ultimate bullish outcome. So there's a lot, and if you didn't see the market today, it was absolutely crazy. I'm even shocked. I did not think we were going to break out of a 418 range, and there we closed at like 419.50. So it does get things a little bit better, but it does show a lot of things happening right now. And now that's why, let me get to the pretty pictures before we start here. What you're looking at here is the MOVE index, and pretty much it is the UVXY or the volatility index for the bonds. And if you notice, this is one of the highest points that is reaching leading into Jackson Hole, and this is very weird. Why? Because it is August right now, and usually the bond volatility, it does not go this high. So really, we've talked about it, and we've been saying nobody knows what's going to happen. It could potentially be historic, or nah, he's going to say nothing new and just do his thing. Well, no matter what it is, the bond market is highlighting that, well, there's a lot of uncertainty and there is a lot of volatility. So the bond market is saying one thing, the stock market is saying another. But now here's another pretty picture, and this is important to watch because as we get into the analysis here, you'll see what we're talking about. But this is the S&P at the bottom overlaid with the U.S. financial conditions. And now we brought this up a couple of days and a couple of weeks ago, but coming into this Jackson Hole now, you have financial conditions higher than when they first started raising rates. So it's going to be an interesting one because people are going to be asking, well, does Powell address the financial conditions, or does he focus on jobs and employment and everything else he was talking about? So we got a lot to talk about. Drop your thumbs up on the video. Make sure you're subscribed. And seriously, tomorrow could be a big one. We better see you on stream because that is where all the action is going to happen. YouTube.com/thestockmarket. But I'm sure you already know, baby. So let's get it popping. Again, you see, I got bull and bear, baby. We got bull. It's like a cape. Nah, I don't know what I'm doing. All right, run it, baby.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, Chad, we have a lot to cover. The first question is Powell going to pivot, and that would be extremely bullish, or will he be poker and be extremely hawkish? If you don't know what poker means, it is a term that we invented about 3 days ago, and it means Paul Volcker. That was the most aggressive Fed chair that you have ever had in history, who raised interest rates all the way up to 20 to stop inflation in the 1970s. So if you want to look at it another way, the real question, and that's why it relates to those financial conditions, will Powell get the market to take the Fed seriously? Because over the last month, everybody has ignored everything. And again, this volatility in bonds and stocks going up and all the Fed people saying, no, 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 we're not going to pivot. But then the market's like, yeah, then they're dropping the rate cut expectations. That wasn't the market taking them seriously. So a lot of people are saying, hey, this might be Powell's chance to cement it in stone, or will he sound the same and kind of leave the pivot on the table and just come in as hawkish as he has already expected? And that's one thing you got to realize. Part of that rally today, even when I'm looking at it go above 419, one thing you got to realize, base case, people are expecting him to be hawkish. So if people are expecting him to be hawkish, volume's been low, exposure's not too high, yes, that shows people are uncertain, but then that also means that, wait a minute, people could actually respond quite well. And if you get a hawkish event and it's not anything too crazy, you know what the market will do. They will take it and run with it. So keep that in mind. That is really the broader concept of it. But now let me give you another thing to realize. This is Powell's opportunity. Stocks are ripping. Financial conditions are better than when we cut rates or when we rose rates for the first time. And then there is the jobs market. And now Powell is like, well, that's strong. There's no sign. Remember, no sign of recession. So here's the question. Jobs or the stock market? One of them is going to die. One of them is going to live. That's essentially why tomorrow is so important, because this is a choice Powell could make. And now, if he doesn't make that choice, you got to think about it. That would be pretty much sounding the same or adding nothing. And then that would leave a more confusing reaction here in the market. So keep all of that in mind as far as a bullish outcome for tomorrow. Again, like I told you, the market is already hawkish. Exposure is low. Anything inline or neutral, that would give you a positive outcome. But also, if he expressively kind of, keeps that pivot on the table, or says what he says last time, acknowledges what he needs to, but does not delve any further, but somehow pulls off that Powell finesse where, I don't know, like he just sounds confident about it. I don't know how to explain it. That will be a bullish outcome. Pretty much anything neutral, not new. And essentially, this is all you got to boil it down to. Does Powell and the Fed care about that rally that they just saw? Was it really a problem for them? That's all you got to answer, because if it's not, that's going to be bullish, and that's what people are going to be looking for. How do they go about addressing that, the financial conditions, and all of that? That is the bullish outcome. The bearish outcome tomorrow would be is if Powell comes in more hawkish than already expected, because like I'm telling you, hawkish is already the base case. So if he does that, and that would pretty much be some new information or a new way to communicate what he's already been saying, but kind of more aggressive. Again, think quantitative easing, because that's something we got to keep in mind now, because coming into September, they're going to reach the max, runoff. We'll see if we do it again. It hasn't really hit the balance sheet, but that's something people are talking about the reality of. But does he mention stuff like that? Does he bring up new information? Does he say there's a problem with the rally? All of those things would be bearish. So keep that in mind. But now I have to throw in the ultimate bear, ladies and gentlemen. This is what I've been talking about here. And it's just to say that this is why it could be historic if Powell really needs to fight inflation, if one good CPI print wasn't enough, and now financial conditions are a problem. The most bearish thing, which could really send us down and increase volatility a lot, it's simply this. If you hear 4% neutral rate come out of Powell's mouth, that would be the dagger. It would kill the rally, and I personally think that would take us back to lows. Why? Because if you say 4% neutral, remember, we rallied off of him saying 2% neutral and thinking that we were there, but 4%, that naturally just means a couple more or a lot more bigger rate hikes. And then at the end of the day, if you're going to say 4% is neutral, that means no pivot, no nothing on the table until you get to 4%. And now why 4%? James Bullard brought up 3 today. And again, different comments of that nature will have different reactions. Pretty much watch for what Powell says about neutral, but by going as high as 4, that would match up with the dollar and some other cross currencies or cross assets that we're seeing. But overall, 4% would be a good way to overshoot, or at least give him room where he doesn't get boxed into any corner where stocks do what they did this last month or so. So that is the ultimate bear situation. The ultimate bull now, like I'm saying, is if Powell just really comes out like, yo, man, actually that CPI was good. I know if he really sounds confident and starts sounding like Janet Yellen type beat, and it's just like, wait, he's really, really bullish. But ultimately, if he defends that 2% neutral, that will be very, very bullish. And again, like I said, that will pretty much say to the market, hey, that rally's cool. It's not getting in our way in our fight of inflation. The market would love that. So hopefully you're ready and prepared. But Chad, I have the plays for you now, but like I've been saying, the real play is going to be happening when we get the interpretation. And hear this again, with this move index and showing bond volatility, the point is nobody knows anything until we get the words out of Powell's mouth. So keep all of that in mind, stay nimble, and that's why we are outlining multiple scenarios, because once that comes out, it's going to be about interpretation and saying, okay, is this bullish? Is this bearish? Is it really bullish? Is it really bearish? And then knowing how to position. So let us get into the plays. So right off the bat, I'm starting with the first play. You already know what it is. We brought this one up, HYG and TLT. I have RTX above that. We'll go over that, but there's another play for you. But I want to start with the ones you should be specifically watching in relation to this, or could give you a leg up on it. Again, it doesn't mean these are the only ones. Like, I don't have bank stocks on here, and that is another good one to watch, but keep all of this in mind. But HYG and TLT, we talked about this yesterday. If Powell is ultra hawkish, if it is a negative reaction and he wants the market to take him seriously, puts on HYG or TLT, that is the play. And again, if it is very hawkish and he says 4% neutral, I would be willing to go a little bit bigger on that. So that is the downside. However, if Powell is dovish, if it is a bullish reaction, then you would be going for calls or waiting. And I wouldn't be opposed to waiting again until we see, because 30 days from now, you still are going to have another rate hike, Powell meeting, all of that, CPI data, and everything else. So keep that in mind. That is play number one. I just want to simplify that one. I did not add to the other ones I'm holding. So that's why I'm saying, even the way I told you how to play it, that is how I'm going to be going about it tomorrow. So let's see, baby. But that's play number one. Play number two now, Beto. Bitcoin, it's a big mover during these events. A lot of time it's just easy to overlook it and forget it, but crypto does respond to Powell, and oftentimes it is bigger. So I don't know how the volatility will be on the premiums, but even for shares, this one might be a good one. But essentially, watch Bitcoin's effect during this. This is one that I think will honestly be a little less crowded, and this is why I'm bringing it up this time around, because I think everyone's going to focus on a lot of stuff from Apple Tech, Tesla, and then they're going to look at bonds, and then TLT again. That's why HYG a little less crowded than TLT, but hopefully you can see my line of logic with this. And you've probably seen Bitcoin move a lot, so keep your eyes on this. That's the second play to be watching. And then finally, number three, baby, LABU, the biotech index. So this is ultra levered and it moves a little weird, so be careful with that. But it has been oddly bullish, but it could be a good play if we get a neutral reaction. Let's say it's neutral, things don't change much, and maybe I should have put this in earlier, so God bless you if you made it this far. But remember, last two Jackson holes didn't really cause too much movement. So if it is weirdly neutral in a way, this one could be a good play, because like I'm saying, it's been oddly bullish, it's outperforming. And then if healthcare and some of those names could get movement a little more defensive, that one could be a good play. And if things really do get bad, you'll watch this thing dump. Again, if people really think it is bearish, watch for even LABU or any of these to kind of give an early signal during the whole interpretation. This could definitely be one to watch, so keep your eyes on them. But those are the three plays related to Jackson Hole. Let's go back up to the top, RTX. That's another one. We saw this one on the scanner. I remember I made that LMT play. It got clapped, but we've been bringing this one up. RTX came up again on the scanner here, so I think it could be big. It moved up a lot afterwards, so I like the movement that I saw, but I'm keeping my eye on this one depending on how things play out. And then with that being said, ABIVI, they're getting at a very key level here, back to kind of when the first crazy rally started by the end of the year. So where they go from here, I think it could be good to trade, but also for the long term. And like I'm saying with like RTX and other plays, depending on how tomorrow goes, it might start to send treads for some of these. So that could be a good one to watch. But those are the main plays. As far as everything else, I did make a couple of day trades today. We're holding a lot overnight, so you'll be able to see them here. These are some of the open ones and what I'm holding, and even after today's action. And there is SMMT. I'm still holding that one. I'm down 150 on it, but I am still going to be holding a NVIDIA short that we made as a day trade today. Going to be swinging that one coming into tomorrow. made a play long on Plug and Teledoc. Remember, we brought that up yesterday. I averaged down on the SQQQs, and then we flipped out of Tesla, and then the Twitter. I did get squeezed again, but I'm going to be riding that one out. So here are the open ones again. We've been doing a lot of day trades, and now that's what you're seeing here. We started, I actually went pre-market on Plug. Amazon news came out. They're doing a partnership, and then it said that they would get warrants in the company to pretty much buy them at like 26 bucks. So went up to 30. I grabbed 100 shares, but why? Because the warrants are based on them doing 2 billion of sales to Amazon. And then if you go look at Plug's revenue, it's like 500 million, but that's one level. Again, I hate Plug, to be honest with you. I haven't traded this stock since I was like 15 years old. It was kind of one of those scammy energy ones. I'm surprised it is what it is today, to be honest with you, but down for a day trade on it. I thought it could have a lot of hype and momentum, so I'm holding that one. That was the first play. I closed out of the JWN. I got scammed. I didn't realize it. I should have made more. I realized $100 on that trade, but I should have actually had about 200 bucks, believe it or not. I don't know. It's a market order, I think, or no, I put in the limit, but the thing moved crazy, and they just, like, I'm telling you, they filled me awful, but that was a positive trade from yesterday. And then I bought Tesla. I held it at $2.99. I got 25 shares, and then you'll see a little bit later, it started going down. I lost $4 a share. I was down 100. So what I did, I sold it, but then I immediately went short, and then like 20 minutes later, it went down another $3. So I was able to close out of that, and then that's what just pretty much left me with 15 bucks of a loss on Tesla. I was like, all right, it wasn't really moving too crazy after this split, so I was like, all right, we'll handle that. And then I shorted 50 shares of NVIDIA, and I also added to 100 shares of SQQ after I went down on that. That was the average down, and then I sold out of T-Mobile for like $30. So there's all the plays. I know it's been a long video here, but at least see what I'm holding, because I am holding stuff coming into Powell. Maybe that next 30 minutes or 30 minutes after the bell will give me some opportunity, but pretty much afterwards, it's going to be crazy. Anything could happen, Chad, and I really hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember there's either multiplication or addition. That's all it is when it comes to your mind. Once it goes in, you can't take it out. No subtracting. So either use new information to have you be at ease, distance a little bit of the thoughts and emotions. Otherwise, if you keep thinking it, even if you're thinking about avoiding it, it'll make it multiply, baby. So be careful out there. Control it. Control expectations. And honestly, like, if tomorrow ain't word to like control your expectations, man, I don't know what is, but I'm excited. I hope you're ready. It's Friday too, but we still got more action after this. So Chad, I hope you're ready. I hope you get that rest, and I'm gonna see you there in the morning. God bless Chadadonia, and finger to the sky, baby. Amen. Amen. There you go. Small good decisions. No bull. Where you at? I don't have. Okay, I love you. Bye.